Hi there, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this, you're definitely at the right place. Please don't forget to hit that subscribe button on your bottom right. And once you're done with that, you can definitely make sure that you leave your comments on the comment section. And once you're done with that, you can definitely make sure that you also tell your friends to watch this video, to like this video, and to also subscribe to this channel. And this will help us to be able to grow as an online learning community. If you're in Hammarskrall, I'm pleased to let you know that Y Education SA is hosting some contact lessons that are taking place at Tusanang Daycare Center next to Mabuatlo Primary School. And all you have to do to become part of us is to pay a once-off fee of 100 Rand. And from there, you'll be expected to pay 250 per subject per month. So if you want to become part of us, on your first month you're going to be paying 100 Rand of registration plus 500 of the 2 subjects that you would have chosen. If you want to join us, you can get in touch with us by using the contact details that will appear right on the screen. If you want me to become your online tutor, I'm pleased to let you know that Chauke Tutorials is hosting some online lessons that are taking place on a daily basis. And all you have to do to become part of us is to choose a subscription that is suitable for you, pay it, and then request your lesson. Once you are done with that, we will be able to give you the lesson of your choice. On online lessons, we only have 3 packages that are available, and you can choose any of the packages that I'm going to mention. Package number 1 is only 350 per month, and you'll be getting 2 online lessons that are recorded as they occur. So you pay 350 per month, you get 2 online lessons per week which are recorded as they occur. Package number 2 is only 250 per month, and you'll be getting 1 online lesson that is recorded as it occurs plus 1 pre-recorded lesson per week. Package number 3 is only 150, and you'll be getting 1 online lesson that is recorded as it occurs per week. If you feel like online lessons are expensive for you, I'm pleased to let you know that we also have got contact lessons that are also taking place on a weekly basis. And if any of these options that I'm going to mention are suitable for you, please choose it, pay it, and get in touch with us so that we can be able to make your academic problems a thing of the past. On package number 1, it's only 450, and you get 2 contact lessons per week. Package number 2 is only 350 per month, and you get 1 contact lesson per week. In our previous lesson, we were looking at the top 10 study techniques that one can be able to use to prepare for examinations. So if you have not yet watched that video, please make sure that you watch the video before this one to be able to understand how best can you prepare for examinations. With that out of the way, let's look at what we are supposed to do. Now in this week's lesson, we're going to be looking at how we can prepare the trading account. Okay, we're going to understand how a trading account functions and why exactly do we prepare a trading account. Now here we are required to prepare the following final accounts. The first account that we have to prepare is the trading account, and the second one is the profit and loss account, and our financial year ends on 28 February 2021. So if it ends on 28 February 2021, it means it starts on 1 March 2020, and then the end will be 28 February 2021. So each and every time when you do something in accounting, you must be aware of your financial period. It's very important. And here we're given some additional information that we have to take into consideration. They are saying that the following information was taken from the books of Hadebe Traders. So this means that the name of the business that we are dealing with is called Hadebe Traders, and they are saying that the financial year of that business ends on 28 February. Remember, here we identified the financial period, and the reason why they are reporting this, they are repeating this information, this is because financial period is very important in accounting. And here they're telling us that the business sells sports equipment and also applies a profit markup on cost. Okay, let's start here. So you also need to make sure that you understand the kind of business that you are dealing with, because it will help us to be able to know how you can record some transactions. Okay, and here we are told that this business is using a profit markup of 50% on cost. This means that they charge that particular percentage on the cost price to be able to determine their profit. Okay, let's say for example, if maybe the markup percentage was 25%, this means that the cost price will always be at 100%, and then their profit markup will be at 25%, and then their selling price will be 125%. Remember that your selling price is a combination of your cost price plus that particular markup that you charge on the cost price to be able to determine your profit. So you need to make sure that you are also aware of such particular questions. And also remember that this 25% was an example, because here we were not given that markup percentage. We were just told that they charge their markup on the cost price. Okay, so let's continue. One thing that you also need to remember is to remember the accounts that are affected each and every time you prepare a trading account. But before we do that, let's maybe look at a trading account and just get to understand what happens in the trading account. Now, when you prepare a trading account, you are actually trying to determine the gross profit. So when you do a trading account, you're trying to determine the gross profit or gross loss, because you won't always have the gross profit. Sometimes your cost of sales might actually be more than your sales, and which will in return result in a gross loss. Okay, so when we do a trading account, we are trying to determine what would be the gross profit. Remember, gross profit is the profit that you have made before you take into consideration your operating expenses, your finance costs, also as well as your things like your interest income and so forth. Okay, so now let's focus on this. One thing that you need to remember is that a trading account is prepared at the end of the year. Okay, so it's a final account. This means when you close off your books, you'll have to prepare a trading account, so which is what we are supposed to do here. And I think one of the things that you also need to pay attention is to ask yourself, what type of inventory system are we using in this particular business that we have? If you look here, we have the sales, which is one of the elements that we are going to use to calculate our gross profit using a trading account. We have sales, and then another item that we have is cost of sales. When I see cost of sales, I'm reminded of the perpetual inventory system. So this means here they use perpetual inventory system. Okay, so this means that the cost price of the goods are recorded as soon as the sales take place, unlike in a periodic inventory system whereby the cost price of the goods sold is only recorded at the end of the year. So here what happens in a perpetual inventory system, as soon as we record a sale, we also take into consideration the cost of that particular sale that we have made. Okay, so this means that cost of sales is recorded immediately after the transaction takes place, unlike in the periodic inventory system whereby the cost of sales is only recorded at the end of the year or at the end of a quarter or even a month. Okay, so here we do cost of sales immediately after we have sold. I hope that makes sense. And so you need to also be able to identify which accounts are going to affect your trading account. So because I know that they are using a perpetual inventory system, this means that I will be looking at sales, cost of sales, and then also the debtors allowance. The reason why we are looking at the debtors allowance is because out of the sales that we have made, there were some customers who returned goods. And remember, we are trying to close off the accounts. We are trying to prepare the accounts for the end of the year. So at the end of the year, all those debtors who've brought goods back to the business, we will need to make sure that we take the money of those goods that were brought back and adjust in our sales. So this means that this is not the final sales amount, because this still includes the goods that were brought back. Okay, so now let's look at what we need to know. So now in a trading account, your debit side is where the trading account decreases, and then this mostly puts in the expenses. But then these are the expenses that have got to do with sold goods. Okay, so this means that actually on the 28th of February 2021, we're going to have cost of sales here. And then we can maybe check in our adjustments just to see if there's anything that affects cost of sales. So if you look at these transactions and just browse them, you'll realize there's nothing that has got to do with people bringing goods back to the business. And even our trading stock at the end of the year will not affect that cost of sales, because why? We are using a perpetual inventory system, and this means that cost of sales has been updated because there was nothing that was returned, so it's up to date. Okay, so there's nothing that has got an effect on our cost of sales. So in terms of cost of sales, we are going to take it as it is from the trial balance, and you will realize that cost of sales has got a debit balance. So this means that when we record cost of sales, we are actually supposed to put it on the debit side of the trading account. So we're quickly going to do that. So our cost of sales is 500,000. So we're going to have cost of sales here, and then you can maybe just try and verify that amount, cost of sales 500,000, so you can be able to see that our amounts are actually correct. And then from there you check the next item. The next item that we have is sales, and we know that sales has got a credit balance, so this means that sales will come here. Okay, and the trading account increases on the credit side, and in this case we're going to put incomes here, and our incomes here in this case we are referring to only sales. Okay, remember here we are trying to determine the gross profit before things like your other operating income and other operating expenses. So those items will not be included here. We'll only be looking at the things that have got to do with our sales and as well as our cost of sales. So in this side we're going to put our income. Our income comes from the sales. So on the 28th of February 2021, we're going to have sales, and then in this case you're going to have to open your brackets and check if there's any debtors allowance. Were there people who brought back goods? And you can see that we have debtors allowance of 14,000. So this means we're going to have sales of 800,000. Subtracting 14,000, and the reason why we are subtracting 14,000 is because these goods were brought back to the business, they were not sold. So even our sales figure has got to show that our sales was adjusted. We need to show that there were some people who brought back goods, and that was taken into consideration. So if we say 800,000 minus 14,000, we will have our net sales. So 800,000 minus 14,000 is equals to 786,000. So we're going to have 786,000 here as our final sales amount. So this means is our net sales. We have taken into consideration what the debtors brought back to the business. So I'm going to confirm 800,000 minus 14,000, which gives me 786,000. 86,000. So this means that our income is actually more than our expenses. So what's going to happen is that we're going to have the profit and loss account on the debit side of the trading account, and this simply says that we actually have an income. And when you do the journal entries, you're actually going to say debit trading account and then you will credit profit and loss. So in this case, what is happening, our profit and loss will be our balancing figure. So you're going to check how much are we short of. If you check here, obviously the total is going to be 786,000. So we're going to have 786,000 here as a total. Remember, we are closing off this account, so it means that both sides must be equal, and you can see that the credit side is more, so hence we're going to have 786,000 here. And here we're going to have the date. We don't have to write it, but you can just write it 28 February 2021, and then you can have your profit and loss. And please also remember to include the details in your folio, but I'm not going to write them because I'm trying to keep this as short as possible. So what you're going to do, you're going to check the difference between these two sides. Remember, I said that trading account is going to be debited, as it is debited here. You can see that trading account is debited by profit and loss. So our 786,000 minus 500,000 will give us 286,000. So this means our profit and loss is going to be 286,000 here. But remember, this profit and loss has not taken into consideration the other expenses and incomes that we're supposed to have. So this is in a nutshell how you prepare a trading account, and then when you open the profit and loss account, this is what you're going to do. You will have profit and loss here, and then you will have your date 28 February 2021, and then you will have trading account. And then you're going to have your 286,000 here. And then remember, this side represent the incomes. So it's anything that is supposed to have a credit balance under the nominal section will come here, excluding the sales and what you've taken into consideration when you're doing the trading account. So here we're going to have expenses, and then you will have the DR, and this is where this thing decreases, this is where this thing increases. So all expenses, your things like water and electricity, anything that you'll be paying for will come this side, and then until you get your net profit or net loss. Okay, so this is in a nutshell how you prepare a trading account. And you need to check your information, because I've said that we are going to credit the profit and loss account. You come to your profit and loss account and check, is my profit and loss account really credited? And if you check here, our credit and loss, our profit and loss account is actually credited. So this means what we've told is the truth. And one of the things that I want to caution you on is that you must always make sure that you verify your amount. So if we take 286,000 plus 500,000, how much are we going to get? And we are indeed getting 786,000. So this is in a nutshell how you do your trading account. If you want me to help you with the profit and loss account or any trading account or whatever that you want me to help you with, please make sure that you use the details that will appear at the end of this video to get in touch with us. And also share this lesson with your friends, anyone whom you think might be helped by this. Share this with them, let them learn with us and become part of us. God bless you as I sign out.